This is a way to keep foreign money in the US, to keep our standard of living higher, and to finance our refurbishing of manufacturing. Hopefully it goes well. But there's something, it's being spun now. And I'm not saying it shouldn't be spun this way, but yesterday, Scott Bessent probably made the most important admission of his tenure thus far.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
We have a lot to talk about today. We're going to get to it in short order. We have 3 items to discuss. Ethereum has been upgraded to 7,500 as a price by Standard Chartered, and actually much higher. We'll discuss that. We'll also discuss Trump considering Yellen over Powell, or considered Yellen over Powell. And we're also going to discuss South Africa wants to back a currency with critical minerals, and we tell you why that's idiotic. Could happen, but it's still idiotic. But before we do that, we want to give you some breaking news or breaking insight that will be proven correct, we believe. For several months at Goldfix, we have been saying that Plaza 2.0, the Plaza 2.0 Accord, is happening one bilateral deal at a time. Trump negotiated with UAE, with Saudi Arabia, with Japan, with Korea, with Europe to an extent. And in all those private deals, we asserted that he would get foreign direct investment. This is an important phrase, foreign direct investment, FDI. They commit money to the United States economy, and we steer them into the industries we want them to buy. Nothing to do with goods. They invest in us. And the reason we said this would happen is because no one would buy our bonds anymore, at least not as much. And as a result of that, we needed a way to keep their money in the US. So you do a couple things. You say, all right, you want to own gold for safety? That's fine. But with treasuries, you get access to us. You get access to our innovation, to our entrepreneurship, to our network. And so Saudi Arabia said, sign me up for 600 billion. Whether that's a real number or not, irrelevant. And what do they do with that money? They're going to put that money into treasuries. That money is going to go into stable coins, and those stable coins are going to invest directly in the US. Now, this is a way to keep foreign money in the US, to keep our standard of living higher, and to finance our refurbishing of manufacturing. Hopefully it goes well. But there's something, it's being spun now. And I'm not saying it shouldn't be spun this way, but yesterday, Scott Bessent probably made the most important admission of his tenure thus far. Trump has been cutting debt for equity swaps globally. This is what we call them, debt for equity swaps, with the US dollar being promised to be weaker as a kicker. Now it's being rolled out publicly. No one will buy our bonds for safety. And Bessent is going to discuss this by calling it, we're going to get them to invest in us, to invest in America, to buy America. So let's just watch that video and you can get an idea of what's coming down the pipeline.
We have these agreements in place where the Japanese, the Koreans, and to some extent the Europeans will invest in companies and industries that we direct them largely at the president's discretion.
And how's that work? I mean, it's almost like an offshore appropriation. I'm not sure we've ever had anything like that in the States before. Have you consulted with the, I don't know, the Senate Finance Committee or the House Ways and Means Committee, or what?
Well, Larry, I think a good framing of that is other countries, in essence, are providing us with a sovereign wealth fund. So
they're going to buy our goods. That's essentially what's going on.
Well,
or wait, let me step back. They're going to build our factories. They're going to help us to build new factories, which Mr. Trump loves.
There you have it. I love how Kudlow, you could see him get it in real time. At first, he's like, oh, they're going to buy our goods. But then Kudlow said, oh, no, wait, they're going to invest in us and build our factories. What are we doing? We're doing a debt for equity swap. You can't buy the US dollar for protection anymore. And I mean, literally, you can't. We're going to put a charge to get access to dollars in the US. which will keep the hot money out that parks money in the dollar and makes it strong for no really good reason, except it's a parking spot. And we're going to grant access to nations that give us money for investment and give them upside. So we're swapping debt for equity. It's a debt for equity swap. You could, if you want to be negative about it, and you might be right, you could call it a bail-in. We're saying, okay, buy us out. We'll give you equity because you don't want our bonds anymore. If it goes well, you get a turnaround situation. If it goes badly, you get a convert spiral. We'll develop this much more at another time. Let's move on to the actual 3 topics. But this is important. People are going to talk about it. They're probably going to start picking up on it in the way that I'm framing it. And they're going to spin it negative and spin it positive. It is what it is. And that's what it is. Our first story is a special one on Ethereum. Standard Chartered Bank has upgraded its Ethereum price targets, citing a marked improvement in the asset's fundamental backdrop. The bank now projects Ethereum to reach 7,500 by the end of 2025, up from its prior US dollar 4,000 forecast, and $25,000 by the end of 2028, previously 7,500. So they moved the whole thing forward. Key drivers include institutional accumulation, legislative support for stablecoins, and anticipated network capacity upgrades. This is the same story. Ethereum is a tokenization platform for stablecoins, to own treasuries, to buy US equity. This is, this is the future. Whether you like it or not, it's the future. That's a premium post. The full analysis is in Ethereum upgraded to 7,500 and much higher with a hat tip to zero hedge. Next story. South Africa wants to back a currency with critical minerals. I'm quoting a mentor back in the day when I said to him, they're going to make silver money again. He said, if those idiots ever make an industrial commodity into money, we'll bankrupt their nation in a heartbeat. I'll personally oversee the new basket we create to do it. He was the former head of the GSCI commodity index. And he wasn't anti-silver. He was a silver bull. South Africa, so that's the quote. South Africa and the African Union are backing a proposed African units of account, a non-circulating currency tied to critical minerals like cobalt, platinum, and lithium. Supporters say it could reduce dependence on the dollar, foreign loans, and Chinese controlled supply chains. Analysts warn volatility, infrastructure gaps, and Beijing's leverage could undermine it. Proponents see a chance for resource leverage and economic independence. Skeptics argue mineral-backed money lacks the stability of gold. Okay, here's the take. See how it says African units of account? A unit of account is an accounting tool. You can't have a physical commodity that's consumed be a unit of account. It will be, in my opinion, destroyed. And China's not going to advise them not to do it. The US is not going to advise them not to do it. We'll just take over the currency. You can't do it. You can't have your money tied to something that's consumed or that's susceptible to industrial demand and supply gaps. But let them do it. Africa will never fix itself if it listens to people like this. Next story. Bessent says Trump considered Yellen over Powell. We include a full candidate list in our version of this post. President Trump is searching for a new Federal Reserve chairman as Jerome Powell's term ends in May 26. Treasury Secretary Scott Bessent says Trump is casting a wide net right, noting he even considered Janet Yellen in his first term. Contenders include James Bullard, Mark Summerlin, Kevin Hassett, Kevin Warsh, and Christopher Waller. Trump has criticized Powell over rates and a costly Fed renovation. Replacing Powell and filling another vacancy would give Trump a Fed board majority. We also have a very special private comment in there about what Trump is doing. And to echo things that Tom Luongo and I have talked about, again, this is Trump steering the news. He doesn't want to be perceived as someone else picking his Fed chair. And guys like Zero Hedge are all over that. So you have to take control back. Okay. The rest of the story, silver doing its thing today. CPI says the Fed should not cut. Fed rate policy not stopping inflation. And gold fix PM. Coming soon, $42 in silver. That's my hope. Let's do the data, and then we'll do a couple charts. Thursday, PPI, big day, 8:30. It's 7:41 right now. Not as studied by the public as CPI, not as mainstream media oriented, but it gives you an idea of potential inflation in the pipeline. PPI is what purchasing managers pay for goods that they make to sell. So it's the beginning of the pipeline or supply chain, depending on how you look at it. And it's very important. It's a preview of future CPI somewhat. Tomorrow's US retail sales. Let's go to the charts. Let's start with the markets on the back end. 10-year yields are down 2. The dollar is up 4. The S&P 500 is up 3. The VIX is up 16. Gold is down 2 and change. Silver is down 22. That's an important area for me. We're going to touch on that now. Copper's down almost 2 cents. WTI is up 14. Bitcoin down 2,400. I'm doing a lot of yesterday's move. Ethereum also soft. Palladium and platinum are up. That's interesting. Platinum is now up after being down. And palladium is now almost down after being up. And grains are all down a little bit. All right, so let's do a quick run through the charts. Start with silver. All right, I said yesterday in the chat, in the Goldfix chat, busy day yesterday, that I like silver as a speculative long above 38.27. I like it up to 39.27 was my price, roughly. And if it gets above 39.27, then I don't think 40 or even 42 are a problem. And I'll tell you why, just visually. This is not a measured move. I know I like to talk about these. It's not a measured move. It's just straight up support. Below here, and this whole structure breaks, then we get a bear flag. We get possibly bull flag, but we get a bear flag within a bull flag. If it holds here, which it is right now, then the market should go up to here and retest this. There's other systems that I use that tell me that. There's nothing in between here and here, is what I'm saying. And if you look at it visually, it makes sense. We skated up, we skated down, we skated down. So there's a good chance that we could skate up again. Little ice patch of price action. And then you run into your real selling. Yesterday was a very big day for silver. It was somebody is short silver and can't get it back in time. And as time goes forward, they lose patience. So they're buying their silver and they're probably long gold and they're selling gold and they're selling copper. And there's all kinds of gyrations in the micro. But if you believe stagflation is in the root, is in our path and Powell can't cut, this is key. Then you believe that you should be long gold and not silver. Gold, you want to be long both. We're going to be long gold over silver. If, however, you believe, as the market now is pricing in stocks, that recession is the bigger risk and the last CPI we had isn't a big deal, then recession is the risk and Powell will cut. And if you believe Powell will cut, what do? You position for an inflationary boom, which means you buy stocks, you sell dollars, you buy gold, and you buy more silver. Stocks are at all-time highs. Crypto, Ethereum and Bitcoin are both nudging up on all-time highs. Gold's within $100 of all-time highs. It put in all-time highs in futures terms last week. And silver is on the cusp of probably its biggest breakout ever. People are nervous. And I think they should be. Let's see what happens. I'm Vince. Have a great day.
Well, thank you, Vince, as always, for this morning's show. And thank you for being here and watching at home. Sure appreciate you spending part of your day with us. And hope this is helpful, as always, certainly in some fascinating economic times and a great period of change. So I'd like to think that a couple of years from now, we'll be able to look back on this and think we had some insight into what was coming. So thanks again for being here. And before we wrap up, did want to mention that we had some news from Argenta Silver that you may have seen. Joaquin Marias was on the show a couple weeks ago, talked about their project, and also mentioned that they had drilling ongoing. And they actually just got back some drill results earlier this week, where they intercepted 1,026 grams per ton silver over 40 meters and even had an intercept of 18,467 grams per ton over 1.05 meters. And Joaquin joined me for a brief update, and I'm going to play a little bit of what he had to say about those drill results here.
We drill an intercept of 1.05 meters with 18,467 grams per ton of silver. This is very, very rich, as you know, and this is a record for the project. And that intercept of 1.05 meters, it's within a larger intercept of 40 meters that has a 1,026 grams per ton of silver. So very, very rich. And we are also disclosing today up deep resource expansion drill hole. This is very important as well because this up deep resource expansion, it's being drilled in between where the resource it's completed or the envelope it's been completed on surface. And we have a hit there, which is telling us that we could expand potentially in the future the resource towards surface.
I would also mention that this is coming on the heels of them completing a financing which was for $15 million Canadian, was upsized an additional $2.5 million Canadian due to investor demand, and gives them the cash they need to continue drilling and expanding the resource that they have there. And to find out more about that project and the results that they just came back with, well, here's the call with Joaquin.